One of the things that I see a lot is I have a lot of clients that buy rental properties and they'll buy the rental property under their name. Okay. So the first thing I try to tell them is you really need to do an LLC for two reasons. I'm not a lawyer. Okay. Remember, I'm just a CPA, but for two reasons. You want to limit your liability. If you have a tenant that happens to, want to sue you, you want to separate all of your personal assets from that rental operation. And the same thing happens if you personally were to be involved in a situation where you get sued. You want to also protect that asset and that operation from that personal lawsuit.
So, Staten Islander News is here today with Juan Carlos Morales, a CPA at Advisio Partners, LLC. JC has over 25 years of experience working with multinational companies that have grossed over $100 million in finance and accounting. He began his career at KPMG in 2020 and in 2007 joined a Miami-based startup, one of the first legal music streaming services throughout Latin America. JC also served as deputy CFO of Havas in Miami from 2013 to 2019, working closely in structuring multi-territory media investments for some of the world's leading brands. In 2019, JC launched Advisio Partners, a management consulting firm providing services to companies of all stages and sizes throughout the U.S., which focuses on creative solutions to common accounting, finance, tax, and operational challenges. So good morning, JC. It's good to have you with us.
Thank you.
So just for our audience, so that you guys know what we're doing, we're going to be talking about three different topics that are kind of related. They're all related to taxes. So the first topic is going to have to do with business structures, and what are the best ones, what they do for each, what the benefits of each one is. The second topic is going to be about how businesses have to hire an attorney if they're sued and how that works. And then the last topic we're going to cover is having to do with self-employment taxes. So the first question that I have is about the business structures. So what do the different business structures, such as Schedule C without a corporation, an S Corp, an LLC, provide in terms of benefits, limitations on liability, et cetera?
I mean, so I guess the first thing is that, we're lucky enough to live here that has a lot of options, right? So like you said, you have the sole proprietor, you have the LLC, the S Corp, the C corporation. So like not one size fits all. It really depends on your situation. And then there's pros and cons to every single one. So, every person should really just try to understand and talk to a professional to try to figure out which is the best business structure. In its simplest of forms, it would be just like a sole proprietor. A lot of like, the gig economy people that they just start getting paid as 1099s and are not sure what to do. Those people are sole proprietors. They're gonna get paid directly to them. There's no distinction between them and a business. If you start organizing yourself a bit, the easiest thing to do would be to just establish an LLC, which is a business, even if it's under your name. And at a minimum, that limits your liability in regards to your actions as a business owner. And then as the business continues to grow and become a little more formalized, you have other layers such as the S Corp. The S Corp is a great hybrid structure that works and is able to save uh, even self-employed people from self-employment tax, which I think you're probably going to want to talk about. And and then the most complex would be the C Corp. All of these are like different living operating units that represent the owners.
Okay,
So
cool.
so it really depends on what you're going to do. As you start out, almost everybody would start out as a sole proprietor, quickly file an LLC in their state, and then just move on from there.
Okay, cool. So if somebody is starting out as like a Schedule C, like you said, a sole proprietor, that just means you got some independent contractor payments and you want to pay taxes on them and you want to file that with the government. So when you're doing a Schedule C, do most people file for a tax ID number first, or do they just file it under their own thing, or is it kind of like 50-50 and you can do either?
So typically, most people hit the race running and will file under their social security number. So the social Schedule C has their name and their social security number, and that's in the simplest of form is sole proprietor. And the problem with that is when I see that is I immediately tell people that you want to at least limit your liability. And how you do that is by registering an LLC and requesting an EIN, which is really simple to do, by the way, at the IRS website. When you have that, then that same Schedule C, instead of having your name and social security number, would have the name of the business, which could be your name, and the EIN of that business, the identification number of that business instead. That's a great way to just continue doing the same thing you were doing, but add a layer of liability to yourself. Does that
Or a
answer your
layer of
question?
protection, protecting your social security number from
Protection.
everyone that you're going to give the W-9 to from having it.
Yes, also, absolutely.
Right, because like some independent contractors, even in the gig economy, they do have subcontractors. So if you have subcontractors and you use a Schedule C, then when you pay them, you're giving them your social security number rather than an EIN number. And when you said a
Yeah,
S corp,
absolutely.
what is, and you said the C corp is the more complicated one. So the C corp is the one with the 1120C that you have to file 4 times a year and you have to prepay your taxes. Is that right?
Uh, no, so a C Corp is an 1120, right? You don't have to file 4 times a year. We can probably explore what you meant from that. And so the main difference between a C Corp and an S Corp is basically a C Corp, but it's called a small corporation. And it's like the hybrid between being uh, a partnership or even a sole proprietor and a C Corp. You have benefits from both, but there's certain little caveats in order to qualify. And one of the ones that the IRS is looking for is that you're going to run payroll and you're going to pay yourself a salary, a reasonable salary.
Okay.
So you know when you do that, then you free yourself from self-employment tax, and I think it's very beneficial. But running payroll, in my case, I typically recommend outsourcing it to a payroll processor. That's going to have a little bit of a fee. So that's why you want to make sure that you're already established and are generating enough income where paying the payroll processing fee makes sense. The other thing is that the S Corp files its own tax return, and a Schedule C does not. A Schedule C is just another schedule of your personal tax return. So it's not like if you go and file your taxes and you're working with a CPA or an accountant, they're not necessarily going to charge you, much more for a Schedule C versus if you're filing a whole other tax return, you most likely will. And the payroll also has its own filing requirements. The payroll does have to file quarterly. You have to file quarterly payroll tax returns with the IRS, and then you also have to file with your corresponding state on a quarterly basis, unemployment taxes, etc.
And
So
that's
there's a little bit
for
more work.
it is right. It's more work for a person, and that's why it kind of comes down to your profitability. If you have employees,
Yeah.
like if you just are having like you just pay yourself, would an S corp generally make sense if you don't have employees other than you?
So I think it would once you pass a certain income threshold, because not only are you paying yourself a salary and you're able to contribute, to Social Security, you could also set up withholding. So you're withholding taxes for the end of the year. But then you can also start exploring creative ways to, maybe layer on a retirement account into the S Corp that's going to fund whether it's a 401k or even if it's a SEP IRA. And all these things, you can automatically start checking the box once you're processing payroll.
Okay.
So they're good ways to tax strategies that allow you not only to save money, but to also save taxes. So I think it does make sense once you're established and are growing and you know this is going to be a long-term operation.
Right, right. So when you're talking about payroll taxes and you're talking about like self-employment tax, just for people who don't understand that, if you have a Schedule C company, you have to pay double what you would have paid as an employee. So when you file your taxes, you have to pay 14% as the self-employment tax instead of 7. But how does it work with an S corp if more money comes in than you pay yourself out? Is the tax rate lower if you do it that way? So if you pay yourself a reasonable salary and then you pay the payroll taxes on that versus the rest of the income, is that taxed at a lower rate, at a different rate? Is it completely different?
That's a great question, and it's interesting how like the tax return is laid out because the rate is the same, right? The only difference is that when you're self-employed, the self-employment tax, like you said, it's double, right? Because typically the employee pays 50% and the employer pays 50%. What happens if you have an S corp and you are the employer and you are the employee? You're still paying the same tax rate. The difference is in the formula and the way it's presented, because as the employer paying that tax rate, you're also able to deduct that tax as an expense. Okay. On the personal tax return, it's also an adjustment. 50% of it is an adjustment to your taxable income. The problem is when you look at the tax return, is that 100% of that self-employment tax is added below the line to your total tax bill. And that's where the formula becomes tricky. And that's why having an S corp could quickly become very favorable to change the way that you report and deduct the self-employment tax.
I
So
see.
the
Okay,
rate is
so
actually the same.
except that you
The
can
rate's the
deduct
same.
it,
Yeah.
you can deduct that
Uh,
50% when you're a business, when you're a corporation, but you can't deduct that 50% when you're a Schedule C. Is that correct?
it's more like, think of it more as when you're doing your tax return and you have your deductions, etc. Even though you are deducting half of it, 100% of the entire self-employment tax gets added to your bill, right? To your tax due. And that's the part that kind of hurts because if you do have an S corp, the formula doesn't work that way. You're deducting the self-employment tax from your taxable income, and it's an allowable expense for the S corp. Okay. But then when you get to the second page of that 1040, you don't have to add it back to your tax bill. So it really is, and there's been a little bit of like there was before a little bit of talk about how how to make maybe that formula a little more favorable to the self-employed, because it really just becomes less favorable to be a self-employed person or a Schedule C reporter, let's call it, um, just because of the way that the tax return is laid out. It is a strategy to just convert yourself to an S corp so that you can report and deduct self-employment taxes another way.
Okay.
But like I said before, it does cost a little more to run an S corp, et cetera, right? You have to maintain a whole separate set of books well, you have to do that for any entity, but like the whole payroll reporting and all that.
Okay. And with an S corp, I know in New York, for certain kinds of corporations, you need multiple people. Is an S corp something where you only need one person? Or is that also you're going to need a board and, like, because I know in New York, for certain corporations, you need a CEO and you need a secretary and you need someone else in order to form the corporation. So it's not just you. Is it the same with an S corp? Do you need more than one person or can you do that yourself?
My understanding, and I'm sorry if I don't specifically know the state of New York, because I'm in Florida. And Florida is a pretty easy state to incorporate and report in. For an S corp, you could be you could run it on your own. You don't need to have a layer of directors. I'm almost positive. And these things change daily, right? They could change daily. So if whenever somebody asks me a question like that, I'll just go online and make sure that I'm answering correctly. So my understanding is that you do not need to have, um, like you said, a whole separate arsenal of directors for an S corp. There's other criteria for the S corp, but specific to your question, I believe the answer is that you're okay.
Okay.
In the state of Florida, where you would need to meet certain requirements is if you want to incorporate a nonprofit, and follow that route.
Okay.
That's an example.
And now the other thing was where you were mentioning like liability and stuff like that. I know that's a big issue for some people that are having businesses, especially in markets where lawsuits tend to happen. I can't think of any off the top of my head, but I know that there are certain kinds of companies where lawsuits are more likely to happen. Um, is there protection in an S corp and a C corp and an LLC against liability in terms of your own personal stuff, like your house, your car, your
Yeah.
assets?
Yeah,
Are
typically, yes.
those
The answer is
protected by like the S corp and the C corp and the LLC in the same way, or is it different?
yes. The answer is that they are protected. The C corp as an entity is the most separated from the individual. The other ones tend to be more like a pass through, like a connection to the owner, right? The C corp is definitely the one that is 100% separate from the owners. And provides the most protection. The others, except for the sole proprietor, do provide that layer of separation of limited liability. And I always recommend people to file for an LLC when they're doing any kind of operation. One of the things that I see a lot is I have a lot of clients that buy rental properties, and they'll buy the rental property under their name. Okay. First thing I try to tell them is you really need to do an LLC for two reasons. I'm not a lawyer, okay? Remember, I'm just a CPA, but for two reasons. You want to limit your liability. If you have a tenant that happens to, want to sue you, you want to separate all of your personal assets from that rental operation. And the same thing happens if you personally were to be involved in a situation where you get sued. You want to also protect that asset and that operation from that personal lawsuit. So I always tell people, please, let's file the LLC for that operation. And in most cases, if the client has absolutely no mortgage or anything on the property, it's easy just to do a quick claim deed and transfer the property under the LLC. And it could continue to file as a single member LLC, right? It's called a Schedule E on the personal tax return. So you don't have to file a separate tax return. It's not like you're incurring, additional costs. It's just protecting yourself more.
Got it. Okay. So yeah, that's kind of one of the businesses that I would have thought it would have more liability with tenants and landlords and stuff. They probably get sued more often than let's say somebody who has like a retail shop or something like that. But I know retail shops do get sued also. A lot of slip and fall things like that. It can occur in situations like that. So when you were saying like, so an S corp, is that also a pass-through entity where it's just another form on your tax return, or that's its own separate thing?
It's its own separate thing.
Okay.
So
So
it'll
where,
file its own tax return.
okay, but with an LLC, it's another kind of pass-through entity. I think they created that not too long ago. Was it like 15 years ago or something like that, where they created the whole LLC segment of,
I have no idea when they created the LLC. That's interesting. But so the LLC in itself, it's like it's a limited liability structure. And when it comes down to whether it's an S corp or not, at the face of like the state, for example, there's no distinction, right? Um, where there's a distinction is really at the IRS level, where they're looking at the entity type to understand how you should be reporting and accounting for certain things. So the LLC, if you have it as an LLC that, because of its simplicity, just reports as a Schedule C, right? You would just file it along with your personal tax return. And it's actually due the same time that your personal tax return. So April and October 15th, if you have an extension. Interestingly enough, the S corps and multi-member partnerships, they file a form called 1065. Those are actually due March 15th, with an extension in September 15th. So they're actually due a month earlier, right? And the idea there is because when you're part of like an S corp or a partnership that has multiple members, that tax return issues each member a K1, and that K1 reports the corresponding income or loss to the taxpayer. So then that taxpayer accumulates all their K1s and then is able to do their personal tax return. So they are due a month before for just the S corps and the multi-member partnerships. The
Right.
personal
And
tax returns and the C corps, which are like its own right living thing, those are due in April.
okay. And this, so the C Corp, even though that one would also generate a certain kind of, does that one also generate like Schedule K or something like that, or that
No,
just files its own taxes and everything like that?
yeah,
Okay.
and that's a great question because the C corp, since it's its own, fully separate operating entity, it actually pays its own taxes. An S corp does not pay its own taxes. The owners pay their share of the income tax that would be due on the income reported in that form that's called a K1. So if you and I have an S corp and it's 50-50, and the S corp reports taxable income of $100, you and I would each get a K1 that says that we made $50. And then we would plug that 50 into our personal tax return. And depending on our personal tax return, I may owe less tax than you, right?
Hmm. Right.
Because everybody has a different um, calculation depending on what else is feeding taxable income.
Right. But in terms of like for the Schedule K, a Schedule K is not then subject to self-employment tax. Is that
No,
right? Right. So
hold on.
go ahead. Sorry.
That's a great question. That's a great question. In regards to a K1 that comes from an S corp, the answer is no. A multi-member partnership, which is the other tax form I mentioned, the 1065, depending on the type of entity that is, depending on your role, the income that's on that K1, yeah, that might be subject to self-employment tax. If it's passive type income, let's say you and I have an apartment that we each own together 50-50, that would be passive income and would not be subject to self-employment tax. But if you and I are architects and we're actively involved in a partnership, then yeah, the income that is reported on that K1 would technically be subject to self-employment tax.
Okay.
And
And
depending on the amount of income, I might sit with you and say, I think we should convert this to an S corp, you know?
okay. So it sounds like there's a little bit of a difference. There's a lot of a difference between the C Corp and the other ones, so the S Corp and the LLC. But the S Corp and the LLC are kind of similar in that they're both pass-through
Yeah.
entities. Um, they I they have a similar amount of liability protection, which is not as much as a C Corp. But so when it comes to the liability protection that's offered by an S Corp or an LLC, what does that actually do for a person? Like in real life, like do you have like examples of how that might have protected somebody or how that might have benefited them in some way if they would have been a Schedule C filer, they would have had a harder time. Have you had like work with clients where maybe you could give us like an example of where the S Corp or the LLC did protect them?
I mean, the only example I could think about is in the case of a company that is shutting down and gets sued by a vendor that's owed money, for example. If the number tied to that operation is the social security number, that vendor could potentially sue you as a person for the money that's due to them. This is an example. versus if it's an operating entity, they'd have to go after the EIN and would have to first sue that company. And that company, depending on the situation, should be able to protect you because that's the purpose of the limited liability company. And the reason I say it should is because, from a legal perspective, there's a lot of complexities or details. Like if you have fraud involved, that is a whole other situation where that limited liability window or shelter might not be as strong, right? So, but I'm not a lawyer. So
Right.
what I can think of is that in the few cases that I've had with clients, the fact that they had the EIN protect them, any claims were made to the EIN,
Okay.
not to them personally.
Okay. And when you are sitting down with somebody and you're trying to decide which of the corporate structures that you think is best for them, is there like a different situation where you would say an S corp versus an LLC, or would you say an S corp or an LLC would be equally good for you?
So I typically try to understand from my clients um, what if they believe the business is going to grow, um, and if it's going to grow, you know, and also like their involvement in the business. So if you're talking to an architect who just started out and they only have an LLC, and it's their first year of operations, and they made break even for the first year, but they already know they already have enough work in the pipeline for the next year where they're gonna make a lot more income. When you start doing some tax planning, for example, you could immediately calculate what the tax liability is going to be, including the self-employment tax, based on whatever projections you put together. And then you could quickly just do the same calculation, assuming that it's going to be an S corp. And in most cases, the clients are like, "Whoa, that's a lot less." And it's like, yes, because of the self-employment tax, the different way of reporting it saves money on tax. However, you're going to have to file another tax return, and you're going to have to run payroll. And in my case, we don't do payroll, so we always outsource, right? Um, whether it's ADP, there's Paychecks, QuickBooks, depending on the client, depending on the amount of uh, of employees they're going to have. Most people, it's really just one person at the beginning, and it's probably going to be one person for a while, one formal employee. But there's benefits to that as well. So that's I think the clear distinction is having that conversation with the client and understanding, the involvement, the growth, and explain that as an S corp, you will have to file another tax return. You will have to do quarterly payroll reports, and it's just a little more work, not much, but the benefits should be there.
And so that it would apply even if somebody has just one person that's running the company and one person on their payroll, they would essentially still save money with an S corp, even considering the outsourcing payroll, or is it like that can kind of bring the cost back down again or more even?
I mean, I think in most cases, we start looking at that analysis when someone's going to start making more than like 50, $60,000 a year. And this could this could be for anybody really. Like sometimes you think of nurses, right? Nurses that are like travel nurses that are paid 1099s, or real estate brokers are a great example of somebody who are a real estate broker, typically has just an LLC, and they're reporting everything under a Schedule C. And sometimes the thing with a real estate broker is that the business goes up and down, so they're not able to forecast what the next year might be, but you could still think that in the long run, it's more beneficial, right, to just have yourself as an S corp, set yourself up with a payroll processor, and you don't have to run payroll every month, if you don't have sales. but you would have to run payroll ideally if you're an S corp. But it's really not that complicated to do. Some people get scared, and it's like it's not.
Mhm. And what is it that would prevent somebody from, like, if they have an S corp and they wanted and they're just paying themselves, where is the complication with regard to just doing your own payroll for one person?
I mean, between us, it's kind of a pain to do payroll. You have to do quarterly filings with the state. You got to do quarterly filings with the IRS. And these providers are so well established, and the computers are set up to just do it for you if it's set up right. There's a vast majority of my clients that already have their accounting on QuickBooks Online. QuickBooks Online offers uh, payroll too, and you can easily set it up. So there's a lot of options that are easy to integrate, and I always say the issue is if you try to do it by yourself and a mistake is made, there's a lot of time that's going to be invested in fixing that, whether it's with the state or with the IRS. Definitely with the IRS, it's not going to be an easy process to fix.
Okay. So just to kind of avoid the headache, people might want to
Yeah,
just do the the payroll company.
at least
Um,
that's my opinion. I'm sure there's other accountants and CPAs who think, no, it's fine. They can do it, or even they'll do the payroll for their clients. Um, in my case, I've always been outsourcing that.
okay. And you said QuickBooks itself also offers that option, which would
It
probably
does.
be like much cheaper than, like, let's say, like Paychex or something that just does that. Because I know, like, QuickBooks has a lot of cost-effective options for people, and,
Yeah.
like, if they're already
Self-service.
paying for it, right? Exactly. And if
Yeah.
they're already paying for it, it usually doesn't cost that much more. Whereas if you go and you actually hire a payroll processing company, and it's just for you, for a lot of people, I'm sure that they wouldn't be able to justify it as easily. Like, I don't know how much it actually, like, what kind of numbers we're actually talking about for the payroll companies to process your taxes, but we could definitely look into that and put that in the article too for people so they kind of have an idea of how much extra money it's going to cost. But like you said, they're also going to be saving money at the same time. So when you actually
Yeah.
look together at the cost savings versus the additional costs and the pros and the cons of each different type of structure, that might, help people to come to a decision. Oh, yeah, I have two people that I work with, so this makes sense. Or it's just me, it doesn't make sense. Or maybe they just want to use QuickBooks or something like that. And do you find that, um, what do you find
So
is,
last thing I'll add, like some of the other more robust, call them, payroll providers like ADP, they also are able to layer on, 401k for the owners and for the employees. And that's fantastic. I don't think, for example, a simple self-service offering like QuickBooks Online offers that. I'm not sure we can check that before you publish the article. But I do know that I have clients that actually elect going with the more robust provider just because they're interested in funding a 401k plan through them, and that's complicated and expensive in itself. So if you are able to offload that to somebody like an ADP, then it makes sense. But that not every business owner wants to do that. So it's such a like not one size fits all. It really depends on each business owner.
right, right. And so would you say that there are better business types for if a person has a small to medium business rather than being an independent contractor, that they might want to, like, because it sounds like for medium-sized and small businesses, an S corp is actually the best in terms of cost savings, but an LLC is also a really good option for people because it limits the liability and it makes it so you don't have to pay, rather file a whole nother tax form, right? And do you
Yeah.
find that if you have these kinds of business structures, that people usually would need to hire an accountant or hire a CPA, or is it kind of like the same as it would be with anything else. There's some people who want to file it themselves, and there's some people who want to have it with a CPA. Whereas, I guess what I'm asking is it so complicated that an ordinary person wouldn't be able to do it themselves?
No, the simplest, like the LLC, it's all you're doing, different from a sole proprietor, is really protecting your liability. And I recommend anybody that sits here with me to do so. Um, unless it's really just an activity that it just never, it's not very active, you know. But you should definitely always try to have the LLC to protect yourself. You know, the more complex the business becomes, I think you do want to partner with somebody who is going to provide you with that guidance and then also help you file the tax return correctly so
Okay.
that you don't have any surprise lovely letters from the IRS.
Okay. And also, when you were talking about the multi-person partnerships where they file the 1065, that has no liability protection either. Is that correct? That the liability
No,
passes
no,
to
it
the
does.
partners. Oh, it does. Okay.
Yes, yeah, it does.
Okay.
It does. It's so when you open an LLC, if you were to open an LLC by yourself, um, then the IRS automatically will assume that you're going to file a Schedule C, right? Let's say, for example, if you're a hairdresser. And if you and I both are go on to the IRS website and file an EIN because we just want to open an LLC because we're gonna run our magazine together, uh, the IRS is automatically just going to assume that it's because it's two of us, it's multi-member, that we should file that form 1065. But the limited liability, as long as we're both limited partners, would work either if it's just a single member LLC or a multi-member LLC. It should protect us. Yes.
Okay. But if a person is doing like the just like an ordinary kind of partnership, not an LLC partnership, then they wouldn't be protected from liability if it's not an LLC. Is that correct? Like a general partnership.
I mean, with the general partnership, the protection is much different. Yeah. Yeah. And in all my situations, all of the multi-member are all limited liability partnerships.
Okay.
You do have other structures that have general partners and whatnot, but this office doesn't have any of those.
Okay. So, is there anything that you would like to add in this business structure section before we move on to the next section?
No, I mean, other than the fact that there's a lot of options, so that's good. And you should be able to not only do research online, but hopefully talk to somebody you can.
So I was just asking you if there was anything else that you wanted to add about the business structures before we move on to the other topic.
Oh, that, the good thing is that we have options, right? So I think it's important to just do your research online and then also connect with a professional, an accountant or CPA who you can trust and is willing to help you just think it through.
Okay. And then, so this second topic is going to be about where which business types have to hire an attorney. So, what of the business types that we discussed before? So, the Schedule C, sole proprietor, S Corp, C Corp, and LLC. What business types would have to hire an attorney if they're sued?
So, I mean, my understanding is that any of the entities that stand alone, so everything that we just talked about except the sole proprietor, should hire an attorney to represent that standalone legal entity. If you're a sole proprietor and basically you're representing your social security number, you can represent yourself. But if the lawsuit is with an EIN, an employment identification number, my understanding is you should hire an attorney.
Okay.
And typically, my recommendation with my clients is always just make sure and consult an attorney to
Okay.
to to make sure, because I'm not one, just to make sure that you need to hire an attorney. Maybe you don't. There's situations where it might be small claims court and you may not have to hire an attorney. But those situations are each so specific and individual that if it's not that you're a sole proprietor, I always recommend you hire an attorney. In my case, even if you are a sole proprietor, I still recommend you consult an attorney.
Okay. And so this is because so when you have an EIN, that in that instance, then if somebody is suing the business behind the EIN, you would always have to or you should always try to hire an attorney if somebody was to sue
Yeah,
someone.
yeah. I mean, that's how I recommend it. And mind you, it's you know, it's painful at times because that's an additional expense. And small businesses sometimes don't have the budget to just go out and hire an attorney every single time they get sued. Uh, but but yeah, I tend to recommend that if you have an EIN, you should hire an attorney. I mean, something when you show up to court, you're expected to show up to court with an attorney if you have an EIN.
Okay.
And if you're a sole
And
proprietor and it's your social security, you can represent yourself.
okay. And I know in some instances it's actually required that a company would have to hire an attorney, whereas an individual can represent themselves. But in terms of like if you have a corporation or a company, you cannot represent yourself. Like legally, they would require you
Yeah,
to have an attorney. Okay.
that's my
Um,
understanding. Yeah.
okay. So I guess this appears to be based on something like some kind of presumption of profitability, or is it just that I'm wondering why this is the case, why um, the business owner could not act as their own attorney in a lawsuit against the company that they work for, and they have to actually hire an attorney because I know that some smaller businesses have literally been sued out of existence because either they couldn't
Yeah.
afford to defend themselves or they couldn't afford um, the judgment against them because the judgment in many instances isn't based on the ability of a business to pay for something. It isn't based on the size of the business. It's just based on something determined by the court. And, if they decide to award someone a judgment of $5 million, then that company who only has $250,000 isn't going to be in business anymore because they would have to declare bankruptcy. So, is this something that is ever going to change as the work landscape has evolved and so many more people are like freelancers and in business for themselves? Is this something that would be expected to change, or is this just kind of like gonna probably the way things are?
I actually looked it up because I wasn't sure, and it doesn't seem like there's a lot going on in regards to changing this. You know, so the fact that it's a separate legal entity, yes, you're supposed to, have separate legal representation. And to your point, it has happened where these lawsuits could shut an entity down. But I guess if you think about what we spoke about earlier, the entity itself is also protecting the owner, right, by that limited liability. So liability can only go up to whatever assets that entity has. You can't go after the owner. So, the pros and cons of the complexities of the way we're set up. I'd say, that uh, one of the things that's really important is to have like a solid engagement letter, for example, if you're or a contract, right? Where that legal section and the part about lawsuits, et cetera, it clearly defines what the rules of the engagement are and when you can be sued, et cetera. Excuse me.
Because if people don't do that, then they're kind of like if their contract is not solid and it's not like if it doesn't spell that out, then it could end up leading to like a long dragged out lawsuit or something like that with lots of legal fees.
Yeah,
Um,
or you could say it the other way around, because every situation is unique, is the fact that, you and the other party signed a paper that agreed to those terms, then you're limiting, the exposure of a lawsuit to whatever was signed by those terms, right? Uh, I think that's the better way of saying it. There's that old saying that says that an agreement that you sign with someone only comes handy when you're not in agreement. All right. So it's good to just have some solid language there that are both signed on because then if there's a disagreement, you can go back to that document and say, well, we agreed, for example, that we have to settle, there's no court, we should do mitigation, et cetera. There's steps first, and that'll help you as a small
Right.
business owner.
Right. And do you normally recommend when you see companies that have contracts that they do use binding arbitration or require binding arbitration? Does that tend to be cheaper? I'm assuming you still have to hire a lawyer, but does that
Yeah,
tend to benefit people more to have that kind of stipulation in the contract?
I think it does, and I think I have it in my engagement letters. And thank God I've never had to use it. But yeah, and like you said, you still have to hire a lawyer. So, but at least you've set yourself up already with a document that is in agreement with the other party. So you both signed, and if you follow those steps, you might be able to structure that process in a way where maybe the lawsuit could end sooner, et cetera.
Okay. All right, cool. And so I guess we also kind of did talk about with regard to lawyers and having to hire an attorney, is there anything else you want to add before we move on to the next topic?
No, other than, if you're in that situation, yeah, you should hire expert advice.
Okay. So, business owners should kind of try to find lawyers in their network to kind of speak with beforehand so that if they ever needed something in the future, they would have people to call on. That might be a good idea for people to do.
Yeah, and even, I mean, almost every city, et cetera, has Chamber of Commerce, and you have these, organization units that you could become a member of, or when you need help, you can seek help there, and you'll quickly be connected to somebody that should be willing to help you. Yes.
Okay. So the last topic is I wanted to talk a little bit about self-employment taxes and when they're required. So they are, they're required in situations where, with like a Schedule C, like you were saying before, self-employment taxes are also uh, on an LLC. But whereas with an S Corp and a C Corp, there's not self-employment taxes because they can be you had mentioned they can be deducted, so they're still there, but they become like a deduction against the income. Is the changing work landscape, for example, companies like Amazon using independent contractors for their delivery services, thus ending up placing the full employment tax burden on the contractor? Are these creating any changes in regulations or are there any changes that are being looked at to kind of make the self-employment tax system more fair to gig workers and independent contractors?
And I guess the first thing is that the threshold is $400, right? Which is crazy low. I don't
Yes.
think that it makes sense with today's economy and how many gig workers we have. And you're right, it is for these massive companies a way to kind of like push the burden on the self-employment tax, that 50%. Not only that, but a bunch of other benefits as well, right? Like insurance, et cetera, to this 1099 independent contractor that's gonna have to bear all that liability. So it is tough. It is tough, especially with all the changes that we've seen where there's so many gig workers.
Mm, yeah.
There's an entire, like, I mean, there's so many, and I do meet a lot where you always try to talk to them about setting up that LLC, and let's think about, strategic ways where you might be able to lower a little bit of your tax liability and provide yourself with insurance, et cetera. But it's a challenge. There's a bunch of cases that have been out, like in some of the names that you said, like, we all read about stuff with Uber and Lyft, Amazon. I haven't seen anything lately that really has changed, right, or happened. Um, but that also, there's also a lot there that is at the state to state level. In Florida, it doesn't seem like there's much happening. So I think it's a great state to report in, but in regards to like gig workers, there doesn't seem to be much going on in Tallahassee that I'm aware of or that I've read about. Um, I'm not sure about New York, that would be interesting because New York or New Jersey or California or like these states that have a lot more of a gig worker economy. Um, see what's happening there. I don't know specific to each state. At the federal level, as far as I'm concerned, or as far as I know, there really isn't much change happening that I'm aware of. I hope I'm not misspeaking or that there's something massive that I didn't read about. But it is an issue, right? I mean, and so many people who just go out and they're like, oh, I'm just gonna start doing, you know, Uber Eats. And it's like, hey, by the way, the income you're making on Uber and Uber Eats, you're gonna have to pay self-employment tax on.
Right,
And
right.
most people don't know.
Right.
Right?
And they don't think of it until they come to the end and they bring their 1099s to their CPA and they're like, "Oh, you have a 14% tax on everything over $400."
Yeah, it's
Um,
actually 15.3%.
oh wow, it, okay, it went up a little bit. Because I know like what you were mentioning with Uber and Lyft. Uber and Lyft became classified, at least in New York and I think everywhere. They became classified as an employer. They couldn't do the independent contractor thing anymore because of
Okay.
the fact that there were certain things that they did that were clearly in violation of the self-employment laws, laws with regarding to independent contractors. So, for example, if they said to somebody, a driver, you sit here and you're available right now, even though you don't have a ride in your car right now, you're available to us so that we can immediately assign you a ride. That makes them something called on call, which made which means they're not able to do something else. Thus, the employer is in charge of where their body is right then, where that person is, then that means they have to pay them for that time. And they
Oh,
did this in a bunch of different industries where there were a bunch of different industries, including in healthcare, where they were trying to get away with just paying them as an independent contractor and doing the 1099. And it was like, but if you're making them sit there and they can't do something else, that's like the key. If they're sitting there and they can't do something else because you could assign them something right then they're an employee, not an independent contractor. So I know Uber and Lyft got involved with that. And in New York specifically, there's now a delivery worker minimum pay rate or something like that, where the delivery drivers from Grubhub, Seamless, Uber Eats, all of those have to be paid a certain amount per job. So, um, do you think that so you haven't noticed anything changing federally to kind of make it so that independent contractors might be able to have this threshold raised so that it's not $400 by the federal government
no,
that
no. The one thing that I do advise, for example, it goes back to what you just said. If I have a client that has a business and they're paying all of their people as 1099s, the conversation might be, hey, I don't know that these people are 1099s. I mean, if they're full-time equivalents, you need to convert them to employees and you need to report them as payroll. You need to do all these things because technically they're 100% dedicated to you, and you're trying to get around certain reporting requirements and tax obligations by paying them as a 1099, but that's not correct. So yeah, that's I guess the only thing that I've seen. It's more of making sure that if you're paying your people as a 1099, that they are, in fact, an independent contractor, not somebody that should be an employee.
right, right. Yeah, because I know like when Uber and Lyft were challenged recently, and the lawsuit came down, they had to pay all of those self-employment
Self-employment.
taxes and all of that stuff in to all of their employees in
Wow.
back taxes. So it was like millions of dollars at the time. So it was like all that money that they saved for all those years by not doing it, they ended up having to pay that plus penalties and stuff like that. So it ended up not working out very well for them. And that could happen to any company, like if they have people who should be classified as employees on site, and the employees decide, well, we're not really independent contractors, and they decide to sue them, then they could have that same kind of outcome for them too.
Yeah. Sometimes, things eventually catch up, like, and although right now I have not heard of anything, there might be something happening. I may have missed it. There's so much news. It's hard to keep up. So you try your best, right?
Right, right. So, do you have anything else that you wanted to add about self-employment taxes or about any of the other topics that we talked about today?
I mean, in regards to self-employment tax, I think this last question you asked me really ties into like the first one, the entity type, and making sure you're in the right entity type, doing some research online, um, talking to, a professional. I mean, Jesus, nowadays you can ask ChatGPT or one of these apps and just, I mean, don't follow it 100%, but it's all research, just doing a little bit of research to make sure that you are in the best structure. You can change structures, right? Like there's flexibility. We have options. So the important thing I think really is to educate yourself, and so that you can make the right decisions.
So, that's actually interesting what you said, you can change structures. So if you form your company as an LLC, you can change it to an S corp easily, and it kind of travels as the same entity.
Yeah. Yeah,
Oh, wow.
changing to an S corp is actually really, really easy. There's a form, a very simple form that needs to get filed with the IRS. If you want it to be retroactive to the beginning of the year, you're supposed to file the form before March 15th. It's very easy to do. You can fax it in. Yeah, fax. And and then you get a confirmation in writing from the IRS, saying that you've been authorized, that you are now an S corp. And you want to keep that letter, because if you lose it and then you have to request it again, it's not easy. So, so it is easy to do, and you can change from an S corp to a C corp, right? Like and you can change back. Now it does become complicated if you start changing. So typically you kind of want to have that assessment done with, and I haven't seen people who change very often. The most popular is really just going from that LLC to an S corp. And in my experience, I've never seen someone go back. If anything, what happens if the S corp becomes too small and you're not going to be running any more payroll? Normally you end up just winding down that S corp and starting something new. But there is flexibility in changing. Yes.
Oh, awesome. Okay. Well, it was really good to talk with you today. And I
Thank
think
you.
our audience will learn a lot from this conversation. I think it was great.
I hope so. I hope so. Thank you so much. I really appreciate it. I hope you have a beautiful day.
Thank you. You too.
Bye.
All right. Bye-bye.